Yeah, greetings. Today we want to talk about the control account. What the control account is all about, its essence, why it is important to prepare a control account. The control account is prepared most times when ledgers and trial balance are involved. A ledger is described as an individual account or a personal account where information are imputed, personal information, and in that ledger is actually a transaction which obeys the golden rule, which obeys the double entry principle, that is the debit and the credit sides of each transaction. Now, from the ledger, we can deduce information or transfer information to what we call the trial balance, thereby having an accuracy, an arithmetic accuracy of the financial statement. Now, how does the control account come in? This control account comes in to be able to detect or control some kind of errors, prevention of frauds. We call a control account a memorandum account because it is from the ledgers that control accounts are prepared. Information are extracted from the ledgers or even the trial balance to be able to prepare the control account. Yes, we have a control account to explain two significant information, which is the sales ledger and of course the purchases ledger. The sales ledger also referred to as the sales, the debtors control account, I beg your pardon, while the purchases ledger refers to the creditors control account. The this is prepared and information are extracted from the ledgers in order to dictate the arithmetical accuracy of the transaction. Why do we need to prepare a control account? A control account is prepared to prevent fraud. Yeah, it's actually prepared to reduce some uh, fraud, some unnecessary mistake. We also prepare the control account to be able to detect errors, where errors are found, where there are missing figures, where some information are not properly extracted from either the ledgers or the trial balance, or where the trial balance is not having an equal balancing. Okay, we can understand how such information is either missing and know how we can control, okay, in the control account. Yeah, another reason why it is prepared is to be able to ascertain all debtors information and creditors information, where your debtors are categorized as the sales information, your creditors are categorized as the purchases information. Yeah, we also prepare the control account to, yeah, control accounts most times helps us to speed accuracy. Yeah, where information are categorized in sales and purchases level, it will be easier to speed accuracy in management level. Then the control account also aids or facilitates the profit and loss account. Yeah, in the preparation of the profit and loss account, we'll be able to extract necessary information from the control account. So, in all of this, the control account is prepared to do a lot of things. It's prepared to ease the tension. It's prepared to reduce pressure by the sales control and the purchases control. It's prepared majorly to prevent unnecessary fraud. Yes, where there are window dressed information, window dressed accounting in the financial statement. Yeah, it's prepared also to minimize errors. Yeah, where accounts are individually taken or extracted from a personal account, I think errors can be reduced. Yeah, that is why it's a memorandum account to be able to pick up information from a particular source. Okay, that is why it is extracted from ledgers. Okay, to be able to ascertain its accuracy. Yeah, in our next class, we shall talk about the two major categories of control accounts, which is the debtors control and the purchases control. The debtors control is also called the sales control, while the creditors control is also referred to as the purchases control. So we shall talk about that in our next class. Thanks for watching.